Hello and welcome to Finextra TV's Predict 2024 series. I'm Hannah Wallace, and joining us in our virtual studio today to discuss business model transformation driven by economic and geopolitical shifts is Ole Matthiessen, payments, liquidity products and foreign exchange at Deutsche Bank. So Ole, thank you very much for joining the call. It's good to have you on.
Thank you very much for having me.
Really good to have you on, and this is a very interesting topic for our Predict 2024 series. And I think a good place to start is if you could bring us up to date and talk about some of those standout emerging business models that you're seeing today across the globe. So we'll start there.
Yeah, very happy to do. I mean, as we all observe, the world is rapidly changing. The world is, probably more complicated than most of us would wish, but trying to characterize it a little bit into what our clients go through, and obviously what dictates also how we cater to our clients on a day-to-day basis, is really thinking about shifts in the international trade corridors, very much driven by the economic and geopolitical considerations. Then the second kind of a component, really looking at what happened, in the supply chain resiliency programs that many of our clients have gone through, and some have also, recalibrated and are still in the mid of the transformation. And then the third piece really being, looking a bit more into the forward, but also something we have observed in some industry, being the business model transformation in, the way our clients sell their goods and services and the way our clients procure their raw materials, and really aligning that to the more digital world we live in. But starting with the economic and geopolitical driven corridor alignments, we do see that historical corridors are still there, but there's a number of emerging trade relationships that we observe very growing in nature, and that we observe a lot of needs from universal banks like Deutsche Bank are being needed. And just to call out a few, clearly, what we have seen in the in the more digital fintech payment, new economy sector, that was very much driven by the Greater China, like complex and sub-region. With the economic slowdown and less consumption, in China itself, we have seen a huge shift from North Asia into ASEAN, a very digital, very young, and a region also where the wealth creation has been very strong over the last decade, and shifting in there to really capture that strong consumer segment in that market. So something we have seen a lot of business growth, underlying that trend. The second is looking at industries where I would argue there's a couple of industry champions emerging from the East, and again calling out Korea, calling out Taiwan, calling out China, where in the semiconductor, e-vehicle, battery space, we see a lot of shift from selling goods and services in domestic markets towards catering towards the West, particularly Europe in that example. And again, with a bank of European dominance, European roots, with very global operations, we are very well positioned to capture that growth, and it's something that drives a lot of profitability on our end, where we see a number of mandates coming through to us. And then I think the similar trend we see when it comes to investment in and capital flows from the Middle East. Many portray that as the global South formation, the global South creation. But what we clearly see is, particularly in infrastructure projects in Saudi, in the UAE, in continuing into Africa, that Chinese companies particularly are driving many of those investments, and that itself will also create a lot of capital investments from the Middle East into Asia Pacific, with less rosy outlooks from an economic standpoint in Europe and in the US. So those are very interesting trends. Probably the last to call out from that emerging trade corridors would be that we also see, with slowdown in the economy in China, which has been a large market, large sales market for many European companies, that there's some shift observed of reviving the very, very strong and existing trade relationships from Europe into the US. And that again is something where, obviously, with our global house bank strategy and vision, we are very well positioned to also help European clients into the US, and something we see as a growing trend. Now, when you look at supply chain resiliency, clearly it has been a topic for a number of years, and very much driven, by the COVID pandemic a few years ago. But even the aftermath of that, we still see recalibration, and we still see that this new mantra of avoiding unnecessary, cross-border, cross-regional dependency in the underlying supply chain, even if it sometimes means slightly higher cost elements to the overall supply chain, that this is something that's persisting, and that is something where also our clients on a global basis, try to go the next step and really think about how to have less dependency on cross-border financing and localize some of the working capital and the CapEx investment demand. How to automate, FX risk exposure and, come up with the right hedging strategy for it. How to ultimately right-size the liquidity positions that our clients hold in the respective jurisdictions they operate in, and really making the liquidity as global accessible as possible. So those are things we still observe in the supply chain resiliency programs. And then the latter, and the third component I mentioned before, is very much how to set up the business for success, and how the digital age can be used to cater products and services, in more e-commerce fashion on marketplaces, and in a more digital sense going forward, which in many cases also means cutting out some middlemen, that had been part of the value creation, in the past.
Well, Ole, thank you so much for setting the scene for us there and bringing us up to date. What I want to cover next are some of the use cases you're seeing and would highlight that are indicating how this space is likely to evolve then going forward. So take us through some of those.
Yeah, I mean, there's obviously a number of transactions we could run through, and probably time doesn't allow to really, demonstrate all the very interesting, value propositions we have jointly with our clients created and realized. But just to probably go back to some of the examples I mentioned earlier. I mean, when you go back to my initial comment on the emerging trade corridors, for instance, a client of ours, which is Ticket.com, which we help to really, automate and operationalize the ability to sell tickets in the ASEAN, environment in a cross-border, manner, and really ensuring that automated FX solution, automated payment solutions, and also the liquidity management itself has not only been doable, but also have been done in a regulatory compliant manner, which means invoices and data submitted to regulators, ensuring that business can scale in a digital fashion, and really making sure that ultimately our client, in that case Ticket.com, can concentrate on growth of the underlying business rather than worry too much about the day-to-day treasury needs, which is really what we are up to and what we come to work every day to ensure that our clients can concentrate on really kind of like is the unique selling proposition on their end rather than worry too much about the financial services. A second example, more from an MNC perspective, and going back to our MNCs that we provide solutions in, for instance, Asia Pacific as a very digital and a very heavily growing market. We have worked in India, which obviously has been the most advanced instant payment network, with UPI really becoming and have becoming a standard, and with a lot of mobile penetration. Also, obviously, the government uses UPI in much broader sense than as a pure payment network. We have worked with our client Bosch to really work with the after-sales departments, and where it's about incentives and vouchers and gratification for underlying purchases, which historically was a very manual, a very paper-based, and a very long-term process for the clients to see the benefit of any incentive and gratifications they would be entitled to essentially embed an API-enabled QR code scan, so that consumers on the ground in India could essentially make use of those incentive payments within seconds, rather than waiting 60 to 90 days, for that mature. And what we see, and our client has seen, that obviously the acceleration of, making clients happy, resulting into, having more purchases done on a subsequent manner, is clearly something that has not only, a client experience of this one-time transaction, but has resulted into, business growth on the back of it. And again, that's a very important component for us to really enable our clients embedding our solutions such that our clients can grow on the underlying sales. And then probably the last and the third to call out, when I discussed the North Asia into the world kind of a corridor, we have worked with SPIC, which is a state-owned renewable energy company in China, on the scope of an RMB internationalization in Brazil to finance and provide financings in renminbi with a cross-currency, hedging transactions on the back of it, and really paying into, the global South corridor, establishing and diversifying away a little bit from a pure US dollar dominance, and thinking about the RMB internationalization, which again is relevant for some corridors, for some client segment, but shows that there's a lot of happening that probably 10 years back was not in the menu to choose from.
Well, thank you, Ole, for sharing those use cases with us. They also really emphasize the pace of evolution as well. And now looking ahead, talk us through the business model evolution within those industry changes that are bringing together the geopolitical and the digital angle as well.
Yeah. No, and as I said, I think when I look at the three categories mentioned before, I do observe that there's a lot of shift, kind of having done the homework on the resiliency, the supply chain corridors and emerging trade corridors essentially having established. They will always, emerge further, and they will always be, part of new geopolitical alliances, further economic, trends. But by and large, I believe there will be a lot of focus over the next quarters and years to come on, the business model transformation of the various industries that we have observed. And again, we see a lot of digitization. We see, the platform economy and marketplaces, getting more dominance, particularly in the B2B space. We do see more asset-light businesses, where it's much less about owning and much more about using machineries and hard assets. And all of that together will ultimately make our clients more digital, our clients, becoming closer to the end client, and in many cases, also more efficient and more profitable. So to just give 2-3 concrete examples of what we have observed and see to continue. The car manufacturing industry, obviously being a European bank with roots in Germany, the car industry is very much in something that is in our home garden, and we have seen that ultimately with previous business models, always thinking about reseller models in each and every country. With the emerging of platform economy, which by definition means having access to the end client is more relevant than purely being the producer of choice, has really not been followed through over the last couple of decades. So we have seen that there's a lot of trends to the so-called direct to customer attempts, and with that, a lot of needs and requirements come that our clients need to embed in their underlying processes. So to give you an example, if a car manufacturer used to sell cars and sell it to a reseller in a foreign market, all they had to do was send an invoice to essentially one entity that would resell the cars. Every handling on the end client would essentially be done by the company on the ground. And with the desire to not only sell one car, but seeing the data of how many cars are being sold, when, to whom, after sales services and monetization of such, bundling more services also as part of the car sales process. And our clients, our multinational car manufacturers, trying to get direct access to consumers in that particular case. With that requirement, very easily speaking, would come things like ensuring that certain financing solutions would be provided, but also equally the payment of a car purchase would need to be embedded in the workforce, which car manufacturers didn't have to worry about in the past. And again, that's something that we have invested a lot over the past in anticipation of that client demand. We have, for instance, established a complete merchant solutions business a few years back that is now paying off because our clients that we have historically worked with a lot are now essentially requiring those services. And that's just one example of many, but I think the platform economy, marketplaces in the B2B space are very much on the rise. And we also see that the consumer client experience, which means 24/7 on your fingertips in a very digital fashion to purchase goods and services, is really finding its shift into the business to business activities, and therefore a lot of investments in market infrastructure, be it 24/7 solutions, be it instant payments, be it automated liquidity sweeps and financing solutions. All of that finds its home in a much more digital undertaking of the underlying process on the client side. And again, that's a very interesting environment for us. It's a fascinating growth of many of the industries, and it's obviously something that we as a bank partner can really establish ourselves from being a service provider, a processor on the back end, to really becoming a strategic partner that enables underlying business growth on our client side. And that makes us very happy and also profitable at the same time.
Well, Ole, thank you so much. As you say, it's such an exciting time for business model transformation, and really interesting to get Deutsche Bank's perspective on this globally as well. Thank you so much for joining us and sharing your insights today, and looking forward to following up and having a further conversation with you later down the line. Thank you.
Likewise, looking forward to come back, and thank you very much for the time.